All right, good morning, guys. Can everybody hear me? Can you guys hear me? Hold on, let me just make sure I can see the chat at the same time. All right, I think we're live. I'm about 80% sure. It sounds like you're in a stadium, yeah, but you know what? It's not an echo I can fix, guys. I'm in like an office right now, so there should be. How bad of an echo is it? Because the problem is that in this space that I'm in right now, there already is an echo here. So it's like, I don't think there's anything I can fix with the audio settings. I think it's just the acoustics. Yeah, it's not bad. The reason why it's not bad is because we're just, let me see here. Yeah, it's good. It should be fine, guys. It should be all right. Okay. The biggest thing though is I want to make sure our Wi-Fi is good. If our Wi-Fi is good and we can stream this, then we're totally fine. Yeah. What I could do is I could test it. Sounds like you're talking from the bottom of a Pringle can. Yeah. I don't think I can fix it, to be honest with you. I don't think there's any way for me to fix it. All right, so guys, welcome in. Hopefully you guys all had a nice weekend, a nice 3-day weekend. For me, a 4-day weekend. So I'm happy to be back here. And we are gonna dive into it. There's a lot to go over this morning. I'm trying to not yell too much, because if I yell too much, then the echo is gonna be even worse. But you know what, the echo is good, exactly. Because you hear it twice. Sometimes you guys have to hear things twice. So, some things happening here in the pre-market session. I really want to yell right now, but I can't, right? You can see market is moving down lower. A lot of things happening in the over the weekend, right? Some things in Greenland, some things in Europe, right? We've had Trump threatened tariffs across the board, right? You guys have seen that. So, you know, obviously in Denmark, okay, in France, a lot of things happening, and the EU is moving against the US in every way possible. So basically tariff news across the board. And we've seen this happen before, right? This is deja vu. And in my view, just before we jump into anything here on the charts, is that what's happening here pre-market, we've seen before, and we've seen this happen multiple times before. And each time the tariff craze has died down, right? Every single time the tariff craze has died down. And I'm not saying we shouldn't, I'm not saying we should discount the sell-off and the gap down here pre-market, but I think we should understand that this has happened before, and it's been resolved every time. This is like the third time this has happened, right? And each of the 3 times, or the 4 times rather, this being the 4th time, that it's been resolved, okay? So that's the most important thing. And so here pre-market, obviously gap down, and our immediate thought process is probably let's short, right? But I'm here to tell you that obviously that's not the best move. If we can break under 680 today, that's gonna be our actual free-flowing move. But as of right now, we're at a critical demand hold here in the market. This is a huge spot, 680, so we're gonna talk about that. We're also gonna go over NVIDIA today, NVIDIA being a main focus for me. NVIDIA 180 is huge today. And we're gonna talk about NVIDIA being one of our main focuses today. We're also gonna go over AMD. AMD actually relatively strong against the market, right? So while other names are selling off, while everything's selling off, AMD seems to be holding pretty well. So we're gonna go over this chart as well. We're gonna go over SMH, we'll go over Apple, we'll go over VIX. You guys are long VIX with me. This is a really good morning because we were long VIX over here, right? We long VIX right over here the past 2 days. We've been longing it around this area right there, and we finally got that nice big move up here. And this has worked so many times too, is if you just look at VIX and you long VIX between 14 and 16 after 3 weeks of consolidation, it's gonna work almost 85% of the time, right? So this is just a quick and easy trade this morning, and I'll be opening up in the green very nicely today because of VIX. If you guys are in the chat, you guys probably know what I'm talking about, okay? We're gonna go over Amazon today. Amazon also at a critical demand spot here this morning. We're gonna go over Netflix. Netflix not reacting to the downside. So despite the overall market selling off, Netflix is maintaining itself in a way that's different from other names. So this is a good sign for reversal. Now, granted, earnings tomorrow, right? So everything can change. So earnings coming, is it tomorrow or is it today? Earnings today. So earnings today in the after hours. So everything I'm saying here at Netflix can be completely reversed to the downside or to the upside. But we'll see what happens today following the earnings, okay? We'll go over IWM, we'll go over Tesla, and I'll have a nice pre-market session. So guys, there's nothing I can do to fix the sound. The sound is the way it is. I'm in a big conference room right now. I'm in a huge conference room. And the conference room has an echo, okay? Because that's just the way it is, right? So econ data. Today's session, in terms of our econ data, it actually is pretty heavy. It's Tuesday, the 20th of January. It feels like a Monday, but it's not a Monday, it's Tuesday. Today's session, we have a whole bunch of smaller data releases, right? But this is not what's important. What is important is the fact that we have headline risk. Throughout today, throughout tomorrow, probably Thursday and Friday as well, we have headline risk. What does that mean? It just means that basically the market is expecting something, right? We're expecting news, we're expecting things from Trump, right? We're expecting things from other presidents to come out, or other countries releasing things. And as it happens, the market's going to react to that in real time. So even though it looks like today's session is not a big econ day, it totally is a big econ day, right? So understand headline news is extreme high risk today. Tomorrow's session, same idea, right? So tomorrow's session, Thursday, Friday, until all this tariff stuff dies down, we have extreme headline risk. Now going into tomorrow's session, we have housing starts and permits, construction spending, pending home sales. But the biggest thing tomorrow is we have Powell at the Supreme Court, right? So Powell tomorrow morning is at the Supreme Court, and we're gonna get live news of that, so be aware of that. So tomorrow's session, huge for the week. Wednesday, the 21st of January, Powell at the Supreme Court. Thursday, we have GDP, jobless claims, PCE, right, big, and PMI, and consumer sentiment Friday. So some big things happening this week, and even more so on the earnings docket. I want to yell right now, but I can't yell. We have an incredibly important earnings week session. And it all starts with one ticker. It starts with Netflix, NFLX, right? So Netflix, the one ticker I'm long right now is Netflix. And you guys probably know that, but I'm not full port, right? Now transparently, like TGT, I was probably full port, right? I was borderline full port. But Netflix, I'm not full port, and my intention is see what happens after earnings and add to it, right? If I see that Netflix sells to 70s or 80s after its earnings report, which would be the worst case scenario, then I'll add to it, right? My view on Netflix is it's a $120 stock. I don't care what happens after hours today, as long as it doesn't change. As long as the earnings report doesn't change my fundamental view on the company and its long-term outlook, then the short-term earnings that we see this quarter does not matter to me, right? So again, obviously I would love to see strong earnings. I would love to see that. I'd love to see the stock go to 120, but I'm okay with it not doing that instantly. So understand that tomorrow, or today rather, Netflix after hours, 4 p.m. We have UAL, United Airlines. We have Interactive Brokers, IBKR. So other things reporting this morning, or this afternoon as well. And then tomorrow's session, J&J. We have some smaller bank names, and then Thursday we have P&G, we have GE, we have INTC, Intel, Capital One, and some other small bank names. So we are kicking off the earnings season this week. It's important that we recognize this, okay? So let's move on. How is it so far, guys? Is the audio okay? It's not that bad, right? It can't be that bad. It's probably just like minor, I presume, right? And hopefully I think it's good. Yeah, it's fine. Okay, good. All right. Yeah, it's very minor. You know what I need to do? I need to get like a sound canceling headphone, or a sound canceling microphone for the streams when I travel. Yeah, it sounds like I'm in a tunnel. Okay, so guys, let's talk about the first ticker today's session. Obviously the benchmark, right? What is SPY doing today? So what I've done here is I have basically cleared out my levels, right? And we're just going to talk about this on a larger time frame. So the biggest thing that we have today's session, the most important thing we have today's session, is understanding that we're seeing the first break of trend, right? This is the first break of an upward structure trend. And so far, since basically November, right, we've seen upward trend structure, upward trend structure, upward trend structure, right? And now we're seeing the first island, right, little island forming over here as a breakdown of an upward trend structure, okay? And so what does that mean? Well, it means that in an upward trending market, longs at demand and breakouts above highs, right? That's the most simple formula for an upward trending structure. In even an upward trending structure, what do? You don't long into a resistance, right? That's what everyone knows. You don't long into resistance on an upward trending structure. Today's session on this potentially downward trending structure, right? We break the structure here, which is now putting us into what we believe to be a downward trending structure. Well, then what this would mean is we short back into resistance and we short back on breakdowns of support, right? What we're not going to be doing, right, is doing this. I think this would be the worst possible thing you can do today's session is buy puts at 680, right? Because if you buy puts at 680, you're buying puts back into a critical demand spot in the market. Let's not do that. The biggest thing I think today's session is looking for this. If we can break beneath the 680s, then I believe we get a nice downside move. And the most likely scenario is back into 670. I think that's what we go to, right? Logically, under 680, we should get a 10-point move. Now, not in one day, right? I'm not saying one day for Tom, Dick, and Harry in the chat, right? If we break under 680, don't expect Scott to go to 670 in one session. But over the next few sessions, like you saw over here, right, back from December 16th, breakdown at 680, you did see 670, 69.50 being the exact low, right? And so that's my expectations here. Under 680, we move into 670. Now, of course, you have a small level here at 670, 650, right? You can see over here, there. You can see over here at 674, you have a small level as well. You have some landmines in between level 1 and level 2. But they're only landmines. Those are only areas where you probably trim into, get some profit off, but not something I would expect some crazy V-shaped reversals off of, right? The V-shaped reversal level will be 670, right, as your big technical demand below. But with that same idea, right, we can't use shorting back into 680 because you can see lows, very critical demand here. So we don't short back there. If you are to short today, it's either under 680 for puts or it's going to be a pop and fader, right? And what is a pop and fader? A pop and fader is literally as it seems. It's just look for a pop and fade. The pop and fade spot in the market, there's two pop and fade spots in the market. The first pop and fade market level is going to be 686. Right, it's right over here. It's the lows from Wednesday the 14th. It is that major gap level. If we can pull back into 686, this, in my opinion, would be the best possible short entry. If we somehow get above 686 today, in my eyes, we are reclaiming and we are going to see your classic wham upside move, right, and a gap fill. This could happen today only if some sort of very positive catalyst came out. If very positive news comes out at 9:40 in the morning, right, where Trump says everything's canceled, we're back to normal, right, then a 686 reclaim will be an obvious long, in which case we get the gap fill back into 690, 150, right? So my trades today's session are as follows. A short under 680, right, a retest rejection failure at 686 for a downside move, or if something magnificent happens today where the market just completely changes sentiment, a break and hold above 686s for a long side move back into 691. That, in my opinion, would be a long side move, and we long side move back into the gap fill level. But in none of these three scenarios am I going to be going into my 9:30 market open all horned up, ready to buy shorts, shorting back into a low like this, saying we're going to break down. Because in my opinion, the more people that do this, right, the more likely we are to squeeze up higher, right? So we don't want that to happen. In fact, 680 hold would be a long today's session. A 680 hold would be a long today's session. Let's not be muppets and short back into demand. Let's be smart, short under demand, or look for the retest rejection at 686s, okay? That's what I'm seeing today here on this pie chart. On the ES chart, you can see it is the same thing, right? So let's do a reset over here. Let's just take a look at the chart here. You can see a beautiful consolidation, beautiful flag, pennant, whatever the hell you want to call it, right? But the biggest thing that's happening here in this session is we're seeing a breakdown of a very key trend line, right? That's what we're seeing, breakdown of a very key trend line. And the best part about the ES chart is you can see the ES chart has more data, right? So because we actually had some price action happening on Monday into Sunday, you can see there was some more data to look at here. And if you look at this market, you're going to see the biggest level here is the 69.24s. And 69.24 is not a level that is new, right? This is not a new level, because if you look back at this, what is the Wednesday the 14th January low? Right? Wednesday the 14th, what is that low? That low on the SPY chart is 686. So the correlation is there, right? The correlation between 624 and your 69.24s is simply right there at the Wednesday's lows. Your best trade today, if this happens, right, would be this 69.24 retest rejection. If we can pop into that level today here in the ES chart, and you see us get a little pop and fade move, this is your best possible high conviction short. If we pull back there, that's my short entry, right? If we somehow break above the 69.24s, in my opinion, we gap fill and we fill the move back into 69.75, and that would be a reclaim of your key breakdown level, and we'll be back bullish, right? So right now, my bull bear pivot, my bull bear pivot is simply right over here at 69.24. That's all it is today, right? It's a very simple approach to understanding today's market. But in no environment am I shorting back into demand here. And so where's the demand in ES chart? The demand in ES chart is the same thing as it is in SPY, right? This is nothing different. The demand here is at 68.80, 68.50, I would say. Right? You can see 68.50. You can see that exact low, the high over here from the Thursday, November 20th session. You can see over here the consolidation. You can see it is a very it's a very clear area in the market, right? This is an area you don't want to be a muppet shorting back into because, again, you've seen what's happened once we've tapped this level. This is an area where the market can potentially hold. It doesn't matter if we are in a downward trending market, right? You don't short back into demand. If we can clear back beneath 68.50s, then we can look for a downside move, right? 68.50 breakdown. If we do break beneath it, then we have downside potential. Where are we going to? You can see it, right? We're going back into 67.71. And where is that level here? Correlate this to SPY for a second, right? Take a second, take a gander, right? Where is the Wednesday 17 December low on the SPY chart? On the SPY chart, that Wednesday 17 low is simply just 669.50. So our correlations between SPY and ES are very clear, right? And the biggest thing today's session, though, is watch the demand below, watch the supply above. That's what it is today, okay? On the Qs chart, okay? On the QQQ, you are seeing a even bigger gap down here in Qs, and this is important to recognize. Why is the QQQ gapping down more so than SPY, right? And if you don't believe me, do a measurement here. Am I wrong? Hold on a second. Before I get too convicted in my comment here, 1.84% down here on the Qs. Compared to SPY, I believe SPY is only down a little bit over 1%, right? So compared to SPY here, SPY is down about, a little bit over 1%, so 1.4%. So it's not a huge discrepancy, but it is a discrepancy to take note of. And the reason why you are seeing a big gap down in Qs, whereas SPY is not gapping out as much, is because you still have banks holding the market. The XLF is not gapping down that much. And you also have NVIDIA and your AMD and your other tickers that are moving even more so to the downside, or pretty aggressive downside moves here. For example, NVIDIA moving down over 2.5%, right? So some big things happening here in tech. Okay, back to Qs. So on the QQQ chart, if you do a reset over here, just remove all your drawings, reset everything, right? You're gonna see the biggest and most important thing is the fact that we just lost a huge trend line. So your trend line is between your November 21st lows and your, someone said this is not Brett, this is a clone. Yeah, you know why? I probably sound so different because I can't yell. I'm like, I have to tone my voice down because I don't want to get, the louder I get, the more echo we're gonna get. So I'm trying to keep it super professional over here, but it's super difficult. All right, so you hear that, right? Where's your level today? Here in the Qs, it's 615 on the Qs. It's super simple, guys. You can see, look at this level. It's staring at you in the face with a neon colored shirt, right? You can see 615 is right there. This is your level. This is your supply today. It is simply just a supply from Wednesday's lows. If we can get a move back into our Wednesday's lows, that's your short. It's super simple, right? Don't try to overcomplicate things, right? Your supply is above us, your demand is down below, right? And where is your demand? Hold on a second, let's confirm that. Where is your demand here in Qs? Well, if you look here in the Qs, you see there's a huge demand here, over here at 600 flat, right? So you know your massive level, your huge level is down here, right? This is where your SPY 670 would be correlated to your here in Qs, right? So this is your huge level, the Wednesday, December 17 lows. Well, where is the smaller level of demand? Well, if you look at the smaller level of demand here in Qs, you're gonna notice one thing. The smaller level of demand on Qs is 610, right? It's 610. It's the Friday, January 2nd low, right? That's your demand today. And if you look at this chart looks a little bit different than SPY, right? Because SPY is opening right into demand. Basically, you have Qs doing this. You have Qs doing a bear flag into demand, which would be a short side move. And you have SPY, which is gapping down a lot as well, but is holding demand. And so you have two charts, one that looks like this and one that looks like this. And right now on the Qs chart, you can see it's a lot weaker, right? So my bias today in Qs is going to be determined by 610. If we are under 610, in my opinion, we just sell. We sell aggressively back into lows. If we break beneath 610, we're going into 600. That's what we're going to, right? That's what we know what's happening here. But if we can hold 610 today, if we hold 610 today, then I know we're going back to 615. That's what we're going to, right? And that is where your next level of supply is for a downside move. And 615 is your next bull bear pivot. If we break 615, we're going into 619, which is your next level of supply, which would be your gap fill, okay? So our Qs chart is basically the same thing as our SPY. The only thing is that we just have some more downside here, right? It's more downside, it's under demand. And for that reason, I am mostly short biased today on tech because we are underneath a critical demand zone, which is 610, okay? Let's see what happens today though. It depends where we open. If we open above 610, then I'm not shorting back into it, right? This would be a hold of demand, in which case we do this, right? So we know what's going to happen today based upon the levels in front of us. We know 610 as our critical demand. We know that SPY, same thing, right? SPY back at that same 680 demand. We know we're not shorting back into these levels. That's what the most important thing is. Like on an open like this, on a Tuesday open, right? On a Tuesday open after a three-day weekend, we have to be data collectors, and we know more so what not to do rather what to do, right? So today's session, we know what not to do. We don't short back at 680, and we don't short back at 610 here in Qs. That being said, let's dive into our charts, okay? Let's go into our other charts. Let's go into our equities. Let's go into our first ticker today's session. Let's talk about the NVIDIA chart. So NVIDIA, in my opinion, is one of the most clear charts. The reason why is because you have a huge level of demand down below, right? You can see 680 is a very, very key level. And this is the last line of defense on NVIDIA. If NVIDIA can break beneath 180, right? If NVIDIA breaks beneath 180, you're gonna see a pretty aggressive sell, right? This is the last line of defense. In case we break 180, we know where we're going to. We're going to 170. So for me today, I'm watching NVIDIA sub 180. If we break beneath 180, I'm looking for shorts back at 170. On AMD is completely different. I would not be shorting AMD today. The reason why is because AMD is holding above a major level of demand. Right? You can see here, look at this chart. This to me is actually a long today. If I'm gonna long any tech name, it's probably AMD, right? The reason why it's probably AMD is because you can see we have support, and we have a big breakout, a pullback to our support zone, and maintenance of that demand. This to me is a beautiful bull flag and a continuation trade happening right in front of us, right? So if the market does hold up and you are looking for a long side trade, I think there's a strong reason to look for AMD longs as long as we are holding 224. So Tom, Dick, and Harry, right? Calm down for a second, Tom, okay? Because if this breaks below 224, I'm not longing it, right? But if the market does maintain demand, i.e. 610 on Qs and SPY starts building off 680, and I see that this chart begins to reclaim, maybe even looking for a reclaim above 230 today, that would be a strong entry point. A reclaim above 680 today, or sorry, 230 today here on this chart. If we can reclaim above our Friday's lows, then there is a strong reason to look for that bull flag to play out, right? So that's my top watch for longs today, is 230 build on AMD, right? So I don't want to enter it right here, to be honest with you, because even though it's a name that's holding relatively strong, you don't want to just see a relatively strong name. You can't just say, oh, it's a relatively strong name, so I'm going to long it, right? You want to look for a reclaim, a level to form here on AMD. And that level for me is the move above 230. If that can happen, then this is my long said move back into highs. We can look for continuation play above 235 and possibly even 238. So there's potential here. There's a lot of potential here. But let's wait for a build above 230. If a build happens above 230, then we have a top long entry. So it's interesting today because I'm talking about AMD longs and NVIDIA shorts. So one of these setups are going to play out, but we have to see what's going to happen. And what determines what's going to happen is obviously going to be based upon the levels. How does the market respond to our levels? If the level is reclaims, then we can go long. If the level breaks down, then we can go short. Okay, so it's a pretty simple and effective approach. SMH. On the SMH chart, okay, this chart, it looks like it needs some, it's exhausted, right? There's clear exhaustion here on highs. And here's the thing is the strongest names, right? The strongest names where everyone's chasing, often turn into the weakest names once it begins selling, right? The reason why is because you have a lot of euphoric upside moves. The euphoric buyers are not strong buyers. Euphoric buyers are not, it's a very important thought. Euphoric buyers are not strong buyers. Euphoric buyers buy at the highs for continuation moves. They use EMAs. They're simple trend following ants, right? They're just trend following ants. There's nothing wrong with being a trend following ant. It's good, right? I like trend following ants. But when a chart gets too strong like this and just moves too aggressively, the trend following ants get stomped on and they leave, right? They run away, and when they run, it sells. And so what's happening here on the SMH is a clear chart that I don't want to be longing into. 395 is a very key level today. And what we've done right now is we've basically just trapped up all the buyers above highs. So if we can see us maintain beneath 395, then my view is we sell back lower than 375. So 395 is a huge level of resistance. In my opinion, on the SMH, you don't want to be longing back into 395. This for me is a potential short trap above the highs, or really, sorry, a bull trap above the highs for a downside move. So 395, be aware of that big resistance in front of us. Okay, so next chart, we have the Apple. Okay, so Apple, I was actually long this on last week, and I stopped out on Friday's session. So I'll show you what I did in this trade. So on the Apple chart, I longed this chart at 261. So I was long right over here with a stop below 256, and on Friday's session, I got stopped below 256. So this morning, you have basically a lot of people who did the same thing as me stopping out this morning, right, as well, because we were just underneath a huge level. And if you look at Apple right now, Apple, in my opinion, still is an area of interest, right? I still consider this, to be honest, another pullback long back to a key demand zone, right? And this whole area between 256 and 250 is a huge area, right? So I'm not like done with this idea. For me, I will still look for longs. I just want to see a proper hold first, and once I see a proper hold and maintenance of this demand, I'll look for re-entry, right? So for me, by the way, thank you, Meta. That's very kind of you. Thank you for supporting. That is very nice of you. Thank you for that. So and also, guys, like the stream. I can't even tell how many likes we have. So how many viewers do we have on right now? I'm surprised the stream is holding up too. I can't believe we're actually holding up. We're in hotel Wi-Fi right now, guys. By the way, I'm still traveling until Thursday, so I appreciate you guys bearing with it. What's with the echo? I'm in a jail cell. EST. That's why. All right. So on the Apple chart, right? I mean, it's kind of fun. How do you guys not? You guys can see I'm obviously in like a conference room, right? What am I supposed to say? Okay, so yeah, Apple at this point is in demand still. Okay, and just because it has sold off, it doesn't mean it's really changing my idea here. I just think you want to wait for proper hold, right? Once this chart starts basing, right? Once the chart actually starts basing here, in my view, that's where you can get the nice upside move back in highs. I think that Apple does retest highs. I want to be very clear about this. Apple will go back here. It's going to go back here at some point, right? The matter is, how are you able to time that, right? Are you able to time the move back in all-time highs here? And that's the question. I mean, for me, that's why I got stopped at 256, because I want to protect myself to make sure this doesn't happen, right? But as of right now, I still think that this does happen. I want to get a proper entry though. For me now, to get a proper entry, I want to see 256 reclaim. If 256 can reclaim here, I would look for a re-entry, and I would use the current lows as a stop loss. So I'm still watching Apple for a long-term entry, but as of right now, I'm basically sitting duck, waiting for this to reverse for me. Okay, VIX. VIX is my saving grace this morning. So if you guys are in the chat, you guys know that almost every single time I signal VXX, I think it's a me, Mike, or Rap. Any single time we signal VXX, it works. Sometimes it takes some time, but I mean, once it works, it really works. And so this morning on VIX, I'm going to probably open up. I'll be up probably close to 6 or 7 grand today this morning on VIX, assuming those contracts move well. So, you know, obviously assuming those contracts. I don't want to count my my eggs before they hatch, but I should be up pretty nicely today in VIX, and the reason why is because we just longed it back at lows here. I mean, it's just a very simple play here. Right? This is, you want the easiest play, right? Sometimes the easiest plays are the best plays. I mean, just look at VIX, right? All you have to do is chart. This is the most simple thing, okay? My little brother can do this, and he's actually, I don't want to say anything. Okay, my little brother can do this. Okay, so you can see VXX, once it sits at lows for a certain amount of time, at 14 to 15, 14 to 16, you long VXX with a stop below the lows, you can get a nice upside move. You'll make 5 or 6 grand every time you trade this, if you time it right. Anybody can do it, right? And that's actually the most beautiful thing, is that sometimes the easiest charts are the best charts. And this is target percentages, because yeah, you know what, Kay, you're right. I'm gonna be honest with you. I think it's gonna be 20%. I don't think it's gonna be that much because I have further out expiration. But if it's more than that, then that's great. But the way that VIX works is any gap up on VIX, you sell, right? You walk away, you run like you just run like you just robbed the bank. Okay, so we just robbed the bank right now, and now we're in the getaway car. That's what you do on VIX, because if you look at what VIX does once it gaps up like this, you get one crazy gap up, you need to run like you just robbed a bank, right? You're not looking for multiple day continuations on VIX. That's not the way it works, right? VIX sits at demand for a long period of time, then all of a sudden, randomly on a Tuesday morning, January 20th, it gaps up 5%, 6%, 10%, 15%, whatever it is. And this morning, it's gapping up close to 28%, right? 28% here in VIX gap up here. So for me, I take that shit and I run away. I run as far as I can. So understand that. That's what we do on VIX. We're just basically robbers, okay? Amazon. Okay, this is another idea I'm having today too. Is I want this, to me is a chart that needs to marinate. Okay, so we have this in the fridge right now. I don't know what's going to happen here, right? But we're at a huge demand spot, right? You can see this is an area where, in my opinion, there's a lot of buyers sitting. Now, do the buyers have the strength to reverse this? Look at this chart for a second, right? Do a little bit of a fixed range volume profile here. Look at all the buyers down below here, 233, 232, even 230, right? This whole area over here is a high area of interest. I do believe at some point we are gonna see a reversal here, but I wanna see if it actually does happen. Then once it happens, this can turn into a nice long trade, in which case we can look for a move higher. The reason why is if you also do this, run a fixed range volume profile from the fib, right? Run the fib. The fib boy is going crazy. From lows to highs, right? You're gonna see that your level here on Amazon is 233.50, 234. So for me today, the biggest thing I'm watching for Amazon is I'm looking for Amazon to reclaim above 234. If Amazon can reclaim 234, I believe we can get a gap fill play, a gap fill reversal play, a classic gap fill reversal play, and then move higher. So my top watch for longs today, actually Amazon and AMD, right? So if we can look for Amazon and AMD, we're looking for a break above 234 in Amazon for an upside move. Okay, that's what it is today here on this chart. Okay, let's move on. Netflix moving down. Not moving down with the overall market, right? And is this a good sign? Transparently, it's not really like a great sign, because there's earnings in the after hours today, right? So again, like I said before on Netflix, I don't care what it does. I am a long on Netflix. I believe it's worth $120 a share. If it sells to $70 during this earnings report, I buy more, right? So you have to understand that a long-term buyer of a stock, you don't care what happens on a quarterly earnings report, as long as nothing fundamentally changes about that company. So let's watch Netflix and see what happens here. Again, we have to see, right? Because we just don't know. But let's see what happens post earnings. Tesla is really weak, and Tesla is getting Tesla also responding to news here. And I don't know if you guys saw the news, but there was a lot of things in the headline this weekend about Canada accepting Chinese EV. And this is very interesting, because Canada accepting Chinese EV, I don't believe is a strong catalyst for Tesla, right? I think it's a negative catalyst. And I was reading deeper into the news here, and a lot of these articles are reporting it as a positive catalyst. And maybe I'm misinformed about this, but I don't see how that's a positive catalyst, right? I don't see how long term that's a positive catalyst for Tesla. If you guys have been anywhere in Europe, you probably have seen it, right? The Chinese EV market takes over everything, because they build things at such low cost, and it's super, super cheap. So how is Tesla going to be able to compete? I don't know. So let's see what happens today in Tesla. Tesla obviously gapping down the overall market, but it's also gapping down on that news this weekend. So again, I want you to look more into that yourself. I'm not going to speak about long-term here because I'm just misinformed. Maybe I am misinformed, but we'll see what happens here. I'll keep this in the back burner. For now, here on the Tesla chart, what's going on here is basically we're just moving back to demand. I think this chart does move back into 4 and 5. That's my next demand here is Tesla 4 and 5. And is that a long? It probably is a long, right? So just be careful. Don't be short back into 4 and 5 today. That's the most important thing, guys. That's it for me today. I am done. I am out of here. I'm gonna hop on live trading in about 20 minutes. I will be back home on Thursday. So today and tomorrow, I'm gonna be traveling still. I'm still here. I'm trading with you guys. I'm on live and I'm on YouTube each morning. But understand this. My Wi-Fi is probably not that good, and there's going to be an echo tomorrow. So bear with it, deal with it, and we'll come back on Thursday much stronger. Okay? I'll see you guys all on live. Bye, guys.